Hello and welcome to this week's episode of the Market Structure series. So I've got something really different planned for you guys today, and it's all about probability. We're going to jump into market structure a bit later, but this is something really important that I want to get across. And the reason I'm chatting about this is when I was thinking about the plan for this video and the topics I would like to discuss, I thought about kind of tips and advice I would have given myself 3 or 4 years ago. And it's been coming across to me lately, and a lot of our students and a lot of people I chat to, I've spoken to hundreds, if not thousands of traders across the last couple of years. And all of them have taken a funding challenge, and almost all of them have failed their funding challenge. And I think a big reason for that is just probabilities, not understanding them at all. And we're going to have a very basic lesson on probability now. It's going to take 5 or 10 minutes, so please just bear with me, and then we're going to jump into the charts because I know that is a reason why you clicked on this video. So let's hop into this really basic coin flip probability calculator. I'll leave a link in the description to it if you want to have a play around, right? Now, we are going to be looking at how smart money concept traders trade normally, okay? We're going to say that you are risking 1% to gain 3%, okay? Does that make sense? So you are risking 1 to gain 3 when you win. And let's say you're taking 10 trades, and we are assigning a random probability to the strategy. Let's say you have a 30% win rate. You're going to win 3 out of 10 trades you take. 3 times 3, right? Because you're winning 3% in essence. So you're going to gain 9% with your winning trades, and you're losing 7% with those 7 losers in this 10 trade sample. Okay, so 9% gain, 7% loss. Net 2% gain, okay, across 10 trades, risking 1%. So you've made 2% across 10 trades with your 30% win rate strategy, risking a 1 to 3. Okay, now we are going to look at the normal kind of funding challenge criteria, and we're going to say, okay, you have 2 months to trade, and you have to gain 18% across those 2 months, okay, and you have a maximum of 10% DD. That's your DD limit, okay. Now, what we're going to look at is our 10 flips, like we were saying. Now, I've assigned that 70% probability of a loss to heads, okay. So we're looking for 8 heads, 8 losses in our 10 kind of trade sequence, okay. So let's calculate that, and we see the chance, okay, of success is 40%, meaning if your strategy only has a 30% win rate, right off the bat you have a 40% chance of failing your funding challenge just due to simple probability. Does that make sense? Now we see the probability is 1 in 2.6, right? It's going to happen once in 2.6 of these 10 trade periods, right? Now, like I said, we only gained 2%, right, after those 10 trades with this 1, 2, 3 risk to reward strategy. So how many times are we going to have to do that across our 2-month period to reach that 18% return? Very simple, 9 times, right? 9 times 2. So we have to do this fucking 9 times without losing 8 in a row. Okay, but we see there's a big fucking problem here, isn't there? 2.6, probability 1 in 2.6, but we have to do it 9 times. So you're going to fail due to probabilities attached to your strategy. Okay, this is a very simple way of explaining it. Obviously, there are a lot of other factors going into probability, but this is a simple way of understanding that what you're doing probably won't work, right? The odds are really stacked up against you. Now, we're going to go into the advanced smart money concept trader, or a Wyckoff trader, who trades with a 2 or 3 pip stop. Okay, but this man or woman is going for 1 to 15 risk to reward, because they are next level traders, right? Or they think they are. Anyway, now we're going for this 1 to 15 risk reward, but because of that, right, we only have a 10% chance of success of our trade. Okay, so we only have a 10% chance of success. That makes this very bad, okay, because we're trading high RR, but we're keeping that 1% risk the same, because traders tend to do that. They don't drop down So okay, I'm trading, instead of going for 1 to 3 now, right, I'm going for 1 to 20, so I probably shouldn't risk 1% per trade, right? But they don't seem to get it, right? You should drop down when you're doing something like that to maybe 0.1% or whatever, or have a play around here on this app and see, or this little widget, whatever, and see what works for you. Now, going to be doing the same thing for the strategy, but we're gaining 15, okay, when we win, and we're losing, okay, 1 when we lose, but we are going to lose 9 trades, okay, out of the 10, win 1, so now we've gained a net 6%, okay, per trial. So we're going to have to do it 3 times. Okay, so now we're saying what's the probability of having at least 8 losses, okay, for 1. So the chance is, okay, there's a 93% chance that you are going to have at least 8 losses, okay, when you're trading like this in a row. And if you're risking 1%, that's you out of your funding challenge. And that being said, you have to do this 3 times, okay, like the previous one. So it's almost dead certain that you're going to lose. But anyway, okay, now we can get into market structure. I hope this has shed a little bit of light on probability. It is yet again, a really simple way of explaining this. There are a lot of other factors going into probability, but this is just a layman's term way of kind of shedding some light on a topic that isn't spoken about at all. So now the next thing I kind of want to get into is where you should be trading and what market structure you should be looking at. Okay, something that I found works like a charm, and I wish I knew this earlier, is you can purely trade off of, okay, use and downtrends. So we're going to be speaking of supply zones now, or distributions, whatever you want to call them. We're going to be speaking about supply zones or redistributions or whatever that created a new significant leg. Now with that being said, we've got a clean chart and we're going to hop into some back tests on EU. Okay, I'm simply going to go into replay mode. I'm going to scroll back quite a decent amount, and that. Let me know in the comment sections how you guys feel about kind of this layout within TradingView. I'm not too fond of it. It's kind of messing with my brain a little bit. But anyway, let's get into this video. So what we're going to be doing today is simply trading off of structural extremes. And what I mean by that, we're just going to be trading off of lows that created new significant highs and highs that created new significant lows. That's it. Okay, we're going to be going for a fucking dead standard 1 to 3 risk to reward. That's it. Okay, and let's get right into this. So, price bullish at the minute on the hourly. Okay, I would preferably be in the 4 hourly. There we go. That's much easier to trade. Now, let's look at price. Like this area, why? Okay, very clear, kind of ran liquidity here, as low as boop, and created this massive leg. Okay, this reaccumulation here is also interesting. Wouldn't want to trade it though, rather wait for this one. Okay, why? As I said earlier, we're only trading off of the structural extremes, so this leg here, this move would be considered a structural extreme in this case. Okay, and we're going to be trading off of the 50% retracement of these moves. So then at 1, 2, 3, like we spoke about in the probability section of the video. Now, let's hop right into it. I have a weird feeling, I think that this area here might hold, but I'm hoping it doesn't, because we're not allowed to trade off this region for this video. So yeah, let's get right into it. Now, I would love you guys to tell me or let me know or recommend some topics or talking points for videos that I can cover to help you guys out. I'm not always sure what you guys struggle with. I obviously speak to a lot of traders, a lot of students. I have a general idea of what topics are difficult to comprehend, which ones are easier to understand. But of course, I'm kind of here to help you guys out and provide as much value as I can. So it would be greatly appreciated if you could let me know of what you want to see. So I hope this one didn't miss our entry. Did I be terribly disappointed? Okay, so I think we might have missed this one completely and utterly. But on to the next one. As I said, only structural extremes, and unfortunately we can't look for shorts in any of these regions because we didn't violate this low here. So we are still bullish up until we run this low. Okay. Now I'm still interested in this region. I'm going to keep it up there. So we have failed, right, to create a higher high. However, we haven't pulled back deep into this accumulation here. So let's see. We're pushing. I want to see a break of this high. There we go. Let me just pause this for a second. Okay. So generally at this point, since we've broken this high or made almost perfectly equal highs, my stop would be at break even. Wouldn't really want to see a run of this low and then a continuation, because I feel like if this gets run, chances are we're going to run the low and push a bit deeper and react off maybe a structural point like this. Okay, so let's see what happens. Bear in mind, stops are at break even, so there we are out of this trade, and good thing. So yeah, remember that one. If you're at break even, keep it there, right? Created equal highs, we didn't break structure, so does that make sense? Why we move the stop to break even? Because we can expect lower pricing, and of course if this didn't hold, this area couldn't create a new high or a break of order flow, so we don't want to trade. We want to get out of that one as quickly as possible. So let me just pause before we miss a POI. Okay, so as I said, this POI was interesting for me. Okay, this reaccumulation caused us kind of to run this high, and it's a very significant reaccumulation that I could consider trading off of. So I wouldn't have just blindly entered this trade. The reason why I'm interested now is we broke kind of this high here, right? We wicked it, and now we had like this little break of structure, and this region looks semi-interesting to me as well as this one. So here we have a sell to buy move, and I kind of want to see if the 50% of this lines up with the 80%. Yeah, see, this looks really interesting. I would want to scalp this, but it's obviously, it's not the greatest idea, because this is not the origin of the move. It's the origin kind of this new high, but it's not a structural extreme, kind of like this move where we expected to see a reaction. Okay, but with that being said, let's see how it plays out just for interest sake, and it is semi-valid, so we're going to risk 0.25% on this trade. Okay. Just want to move the entry to the 82. Simply 1 to 3. Okay, I think we're gonna, yeah, there we go. Okay, -1%, no man's land, right? Shouldn't trade there, and easy to see why. We've ran this low now, so this is an interesting one, because, okay, we had this buy to sell move that obviously ran a lot of liquidity, and now we have another move that ran this liquidity, and this previous structure, but unfortunately we can't trade off of that, because we did here, messed us up. We're not going to do it again. We're going to wait for our structural extreme, which is this region here. Okay, so we're going to wait for price to trade in there before we take another trade. The temptation is I can imagine for anybody trading Wyckoff as well, like these are very tempting, but you don't want to trade off of that. Okay, so we've got a reaction of our region, but we want to push deeper. Okay, so what I'm waiting for is a break of structure, and there we go. We didn't get one, right? We had this little kind of equal high thingy, but that doesn't count as a true break. So what's happened now is, as far as I can see, we've traded below this low. Okay, and where's the next structural zone? Here. Yeah, I just want to pull. This one I like a lot. Okay, so I want to actually put a fib on that. The 50 is a bunch of equal high and lows and things, so I don't want to trade off that. Okay, because I feel like that's going to be run. So maybe just kind of off of this candle here, kind of this last sell to buy move. Here we have an imbalance fill, etc. Session disconnect. Why would it do that? Hold on, let's just roll back to our previous area. Okay, there we go, equal highs, etc. Right, here we go. So I'm going to be entering off that. So let's get our tool there. There we go. Simply stop. Okay, let's wait for this one. So only once we run the low that this trade's holding, well, that we are hoping to kind of catch, that until if we hit stop loss here, then we can start looking for shorts. Right. Okay, just want to move that. There we go. Let's get that into replay mode. Okay, I just want to see. I already see the RR2 at this minute. Right, so we're currently up. So the big problem. I'm just going to change. I don't really want to change time frame because I'm scared it messes up test, but I can't move this thing unfortunately. It's going to be there. Okay, we're up 1 to 3, so that's kind of what our trading plan suggests. So let's call it quits on that one. And I don't want to hold you guys too long because I could do this all day. I know myself. I love this stuff. So let's call it quits. Take that 1 to 3, 2% for the video or whatever. Or what, 1%? I'm not sure, but it doesn't really matter. It's just I'm trying to get this point across to you guys that you should be trading off of structural extremes, or you're going to get stopped out of break even, or you're going to take a loss. But if you wait, right, for the structural extreme, you can catch a easy reaction and get your 1 to 3 and get out of the trade. So yeah, I hope you enjoyed it. Feel free to leave a like, comment, join the Discord as well, link in the description. Have a great one until I catch you guys again. Cheers.